Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking energies and oil prices seeing a big move higher. Oil prices nearing $70 a barrel, something we haven't seen in almost 4 years. So it's been a big move here. Don't forget, over into the weekend, last weekend, we had that big run up on potential for a Syrian conflict. We had the coordinated attacks. Oil prices subsided, and whammo, we're starting to see them come roaring back. So fundamentally, we're seeing the positive news. We had EIA inventories and supplies show greater declines. We've got the technicals now pricing in, showing better upside potential, and everything seems to be falling into place for oil. Something that probably a lot of people didn't see, given that OPEC's been very suspect about the extension of their production cuts, which now look to will be extended sort of indefinitely, but will come up from meeting to meeting. And if you look at what the dollar did, the dollar obviously had very little effect. Dollar actually was a little bit bid today, and it really had very little effect on dollar commodities, oil especially, because oil prices were just looking nowhere near the dollar. We see this with gold, and now we're starting to see it with oil separating itself from dollar pricing. And I think that right now oil is going to be kind of on its own. Looking at the supply numbers, looking more at the expectations for production cuts, looking at the geopolitical risks that are continuing to remain elevated, despite the fact that we did see that the event come and go and pass. So we've seen some calming in the markets. I think that right now oil is very, very much so looking for a target. And if you look at what's ahead, when we talk about those targets, $80. I mean, that's pretty much, I think, what OPEC wants. I mean, they'd love 100. Who wouldn't, right? And I think that right now we're sitting just below 70. It's going to be difficult to get to 80 and 100 without some help. We're going to need to see continued extension of production cuts, probably for the foreseeable future. We're going to have to see those supply numbers that glut continue to dry up, continue to see GDP, global GDP on the rise. And those are the things that are going to keep oil prices from pulling back. That being said, oil is a very emotional commodity, as are many. And when we do see those big sell-offs, whether it's speculators getting out, whether it's bad longs getting caught, I do believe that oil can see a substantial move lower. However, our previous support level way down at $60 seems a bit far now. And I think the 100-day moving average is probably something a little better, somewhere closer to 63, although that also feels like a long way off. But as we've seen in history in days past, oil can get there pretty quickly if you don't watch it. So right now I'm looking at oil continuing to ascend. We need to get to 70 and through it on a settlement basis. If we do that, then we can start talking about $80 targets and $100 targets and wherever you want. Likewise, we have to get through next month's June OPEC meeting with some positive mojo in the oil market, something that they've been able to do in the past, but can they continue to do it? And lastly, I do believe the GDP needs to continue to push the big engine here. And as we saw yesterday, we saw the GDP now number in the U.S. just hovering at 2%. I think that's got to go up if it's going to help oil continue to ascend to these higher levels we haven't seen in over 4 years. This is Todd Colvin coming to you from the floor of the CME Group.